Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman previews the USDA's May crop report. Tina Barrett discusses farm incomes. Aaron Berger explains how to dry lock cows as an alternative to pasture. And Amit Jhala talks about common water hemp control. Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. U.S. farmers have put 45% of this season's corn in the ground, along with 8% of this year's soybeans. Those percentages are both ahead of the nation's 5-year averages by 15 points in corn and 2 points in beans. Nebraska's growers have planted only 26% of their corn and 2% of their soybeans, both behind normal pace. The emergence of the country's corn crop is ahead of schedule. 13% is above ground, 5 points ahead of the 5-year average. We talked with Luke Thursday afternoon about selling strategies for corn and soybeans in the USDA's May crop report, but we started by asking for an update on planting across CVA's territory in Nebraska.
Really planting pretty variable across the landscape. Really just depends where you're at. You've got farmers that are probably done, and you've got guys who are really just getting a good start. But on average, with the good weather we've been having the last few days, I'm going to speculate we're at 75% done kind of by the time this next rain shower is going to come through.
Do you think the delays in planting and that rally we saw kind of leading up to bought any more acres going from corn to beans, or may people switch the other way?
Yes, to both a little bit. I think that the initial dollar that we got out of the soybean market, a month ago, probably primed people to say, okay, I'll take a look at it. And if weather's going to be a little bit wet, it's an easy decision. So I think you'll see some flipping. Locally, I don't think that's a huge conversation. I think Nebraska's just, the guys are in the rotation. But Indiana, Ohio have been a little bit wet. I think if you look back at the planting intentions numbers, keep in mind the Delta was up, about 1 million acres of corn year over year. So they've been wet also. So I think you're going to see some beans going down in the Delta that maybe, at least on paper, weren't forecasted.
What things are all impacting the market short term here? What's been fueling the price movements back and forth?
Sure. Well, everybody by now is pretty well versed in what's happened in the soybean trade. It all started with a spark in Argentina with too much moisture there, creating quality and logistical problems on soybean exports, or at least that was the perception, right? Perception's pretty important. The funds got involved in this thing and really, 280,000 some contracts from net short to net long, just a lot of money behind the move. You also have a lot of weakness in the U.S. dollar, and that's created an environment that's been attractive for money to flock towards commodities. So you even had corn benefiting from that, a lot of short covering in the corn trade. What's really transpired this week is there was the expectation that when Argentina was going to have some problems that we would see some soybeans come back to the U.S. Again, perception. We probably saw a little bit, but soybean basis in the Eastern Corn Belt broke down very hard this week on soybeans. So maybe the physical demand really isn't there. And I think the funds maybe are seeing some of that. You're really seeing a little bit of a sell-off midweek as a result. So a little bit of perception, the story was there, we chased it, and now it's, well, maybe reality's not so much.
Funds remain long in both corn and soybeans?
As of last Friday's report, the week prior they were long in soybeans and had started to actually add some length in corn by about 100,000 contracts. So not only had they covered their short positions, they were actually buyers in corn a little bit. I think what that probably is, that sets us up for a good conversation in corn. Not that the fundamentals in corn really have changed. I know it's a little bit dry in Brazil, but I think that it loosened the funds up a little bit and it allowed this market to breathe. I don't think the funds probably have a lot of conviction in which way they're going to trade corn, at least in the short term. I think we need to see some weather. They need to have an idea of how this crop's going to be impacted really before they decide, okay, are we going to short this market again, or is it time to get behind a rally?
A little bit more in Brazil on that safrinha crop of corn. Is that a big concern?
Well, certainly it's beneficial to the bulls, right? We've got burdensome stocks on a world level. So if we can trim back Brazilian production some, they have a pretty tight domestic carryout in Brazil. So that was the conversation that we're going to import some corn from the U.S. even. That business would not be large by any means, but it does lower the balance sheet a little bit when you look at world numbers.
Let's talk about selling strategies. We'll start with old crop. First of all, how many beans are still left? Are there selling strategies for that? And then we'll move into corn.
Yeah, good question, Jeff. The soybeans are interesting. The farmers sold so many beans on this rally higher. I don't think they have a lot of bullets left to fire. So you talk about hedge pressure and what could develop in the bean trade. I don't think there's a lot out there for the soybean crop yet. Corn is a different story. I think there's plenty of corn to be sold yet. It's going to be very sensitive to what the Board of Trade does. And as farmers all over are probably, it's a pain point for them right now, certainly, is what's happened with basis. Local market can't digest that much corn when it hits it at once. So really it's going to be very interesting to see how this corn market develops. If there's some weather complications, prices could go up, but your basis is really going to be defensive. So if they have old beans, sell them, continue to sell, take advantage of this strength. Corn's a little bit tougher. If we see good futures levels, you could actually hedge corn and wait for basis to get a little bit stronger, but I think our best basis opportunities have long since passed.
Where do you like selling opportunities for the 2016 crop?
Yeah, that's a bright sign. We've really been talking to our guys about, the old crop corn's a little bit tough, but it feels like new crop's a great opportunity. We've poked our heads above $4, and the conversation with producers in this type of environment really should be about, can you make money with corn at $4 on the board? That conversation is different for everybody, but if you can, you make margin above break-even costs, and it lowers what we need to pay the bills on the rest that you have unsold. That's so important. Do that early, and it makes the rest of your year so much easier. The other side of that is if you say I'm friendly and you don't sell anything and the market moves lower, you're in a position that doesn't feel very good. So which situation would you rather have? Sell a little bit, watch the market go up, don't sell anything, and watch it go lower.
How aggressive are you right now in trying to sell anything for the 2017 crop?
Kind of a similar conversation to what we just talked about. If producers are typical forward sellers, that's something you do consistently, and there's profits available. I know we don't know all the costs. That's always the pushback that we get, but you have a pretty good idea of what they should be. Absolutely. Continue to make percentage sales with corn above $4. What a great place to start. Going to take the pressure off of that campaign as well.
What are your expectations for the May WASDE report?
Yeah, next Tuesday we'll see numbers from them. That's the first time that we publish the new crop supply and demand. They will use acres from the March planting intentions, So big numbers on the initial 16-17 balance sheet. Everybody knows that. Old crop will probably see export demand go up a little bit in both corn and soybeans. We've had a really nice stretch of exports in both. The carryouts, unfortunately, are still healthy enough to where it's not a major market move.
Next week, Jeff Peterson from Heartland Farm Partners will join us to look at corn and soybean markets after the USDA releases its May crop report. With data back to 1995, the current condition rating of the U.S. winter wheat crop trails only 4 years, 1998, 1999, 2005, and 2010. The latest crop progress report rates 61% as good to excellent, 2 points better than last week and 18 points above this time last year. Nebraska's winter wheat crop is also listed as 61% good to excellent. Nationwide, 42% of the crop has headed 8 points ahead of average. Tina Barrett says 2015 farm income numbers from producers working with Nebraska Farm Business Inc. have been finalized, and for the first time since 2002, that group experienced a loss in net worth. It was also the largest nominal drop in net worth since 1984. The collection of farmers and ranchers also saw a sharp drop in net farm incomes. For perspective, the USDA totaled 2015 net farm income at $56.4 billion, a drop of 38% from 2014 and 54% lower than 2013. Tina joined us earlier this week to discuss working capital, debt-to-asset ratios, and net farm incomes in 2015.
As we expected, net farm incomes are down considerably. We were thinking maybe 50,000, but ended up coming in just under 30,000 on average, right at 29,000. So certainly a significant drop, about 80% off of 2013, 2014 returns.
Would that be the lowest since a certain year?
Lowest since 2002.
Okay.
So, kind of puts us back into that perspective, in a time when we had $2 corn and $4.60 for beans. So, same income, but very different situations.
Was there a difference between crop producers and livestock producers?
Sure, and in the last year we saw that where crop producers lost and livestock producers gained, and we came out the same. Well, livestock producers kind of joined the crop guys a little bit this year and probably went farther down. So crop guys saw about a 45% loss, while the livestock guys just went from the top of the heap to the bottom.
Yeah.
So
how are expenses eating up margins?
So, expenses are obviously just big. We did see in our irrigated corn per acre, total expenses on average dropped about $40 an acre. So we're seeing that come down a little bit. But we're also seeing a very big spread amongst producers. So if we look at our high profit third for irrigated corn per acre versus our low profit third, we have about $300 per acre difference in what those two averages are showing us. So it's certainly not everybody's handling it the same way.
Where's that coming from, that $300? Is there a clear flag somewhere?
Well, the biggest difference is cash rent. So if we're looking at cash rented acres that we're getting, either having some long-term rents, some bushel leases that are automatically flexing, some flex leases that are out there, or ability to negotiate down. So 150 of it's coming there, the other half is coming from other operating expenses.
How are you noticing that this is impacting debt on operations?
Yeah, so we've been watching debt climb over the last 10 years, and it's kind of been a struggle to know that we're going through our 10 most profitable years and debt continues to go up. We've seen that level off a little bit. We've been sitting just above $1 million for 3 years. A little bit of an increase, but really kind of the same this year.
What about debt to asset ratios?
So debt to asset ratio, if we're looking at the whole balance sheet, still looks pretty good. Debt to asset ratio is 28%. That is 1% higher than last year, which was 1% higher than 13. So we're seeing a small climb there, but still a very healthy position.
And working capital?
That's the problem when we're seeing what the balance sheet is. So from our current position, the stuff that we have to sell and our payments that we have to make this year, we have an imbalance. We're seeing that number drop. Our working capital to gross revenue, so if we're comparing different size operations, that number fell below 30% for the first time since 2006.
So this is a little bit concerning to you, yes?
It is certainly concerning in the short term, and it's a matter of we need to understand why that working capital is going away or why it's not where it was before. There's lots of good reasons. If you went in the last couple of years and bought a lot of ground with cash, maybe we need to put that on a long-term loan and get some working capital built back in the operation. If your working capital is deteriorating because your family living's out of control, we've got to get that fixed before refinancing is going to do us any good.
You mentioned family living. We've talked about it for a lot of months now.
Yeah.
What happened last year?
So we saw a little bit of a decrease, which is really good. So we're about 92,000 on average for family living, which still seems high, but it's less than the 100,000 that it was in 2012. So we're seeing that start to come down. The problem is with 30,000 net farm income and 17,000 of average wages, we just don't have enough income to cover that. And so it's going to have to be cut more, or we're going to have to go out and find some other non-farm sources to get us through this period.
What's the take-home message here as we at least get ready for the 2016 crop growing season?
I think as we see these separation of the farmers who can cut those costs and those who haven't, I think one of the things that's really important is to look at your costs and to know your costs and to do something about it. And that means we're doing some cash flow planning, not something that you get to the bank so that you can get a loan, but a cash flow that you're really working with on a regular basis, that you're updating, that when you're making purchase decisions, you're thinking about it and working on that. So, it's really going to take some planning as we work with these tight margins. It can be done, and that's the important thing.
Our previous episode of Market Journal featured an interview with Kansas State University's Greg Eibendahl regarding U.S. ag loans and debt-to-asset ratios. You can find it on our website or YouTube channel, as well as through the Market Journal mobile app. The most recent data on pasture rental rates from 2014 shows Nebraska producers face some of the highest prices in the country. Of the 10 most expensive county average cash rent prices, 4 were in this state. Wayne placed 4th, Cumming was 5th, Pierce was 8th, and Washington 9th. Those costs might be expensive, but Nebraska Extension educator Berger says dry lotting cows could be another option. We recently talked with Aaron about how producers might be able to benefit from dry lotting by using some of the other feed resources in the state.
So I think in Nebraska we're really in an interesting scenario right now. And if you also look at what the scenario is with current commodity prices in terms of corn, ethanol co-products, harvested forages, really we can dry lot a cow right now competitively in many cases with what summer grass would be. Now there are some management things we need to take into account as we think about dry lotting. Obviously we need plenty of bunk space. We need to make sure we have water in a situation if we have pairs where those calves can easily get to the water. Having an area where those calves can get away from the cow, that they're kind of protected, especially during the breeding season. Providing some shade for those calves is really important as well. But really those things are things we can manage through. The dry lot scenario also provides us some opportunities from management in terms of using some things like rumensin, which can improve feed efficiency. We may take advantage of artificial insemination if we have cows in a confined type scenario where we can utilize that tool. So it provides us some advantages from a regular pasture scenario as well.
Can you give me a brief how-to for producers that haven't used this method before, kind of what they need to know to get into it?
Yeah, so I think you really want to look at your cost. What would it cost you to feed that cow in a dry lot scenario? Include your yardage, include your labor, equipment, things are going to be involved with that. Make sure you have adequate bunk space. If we're thinking about pairs, we're looking at about 3.5 feet per pair to make sure we have plenty of bunk space. Thinking about if you haven't dry lotted cows before, that you have a site that's compatible and meets Nebraska Department of Environmental Quality recommendations. Those are some things to do. Beef website has excellent resources on how to dry lot cows. We've got a lot of research now that can give us some insight on how to do that. So go in well prepared, think it through, but can be a viable management option.
Describe a little bit about what the diet is and how you can expect performance to be the same or differ from your normal situation.
Yeah, so in a dry lot scenario, we're actually able to control, of course, what's being fed, and we want to think about what the performance goals are, and we can really have that be very comparable in a dry lot scenario to what it would be in a pasture type setting. So we want to develop the ration based on what's economical, based on our feed resources available, which is really going to vary with people depending on where they're at in the state and what they have available to them.
What kind of the herd or what part of the herd are you looking at putting into the dry lot situation?
Yeah, so I think the easiest group would be replacement heifers. They don't have calves with them. Those would be the first group that's easiest to do that with. We can then look at doing that with pairs, and that can work pretty well. We can also use early weaning, where maybe we separate the cows from the calves and we target diets differently based on, again, performance goals for each of those groups. So we can really vary it and have the tools available to make that work.
Is this a situation that a lot of producers used during the drought of 2012 or after the drought of 2012 when grasses weren't up to par?
Yeah, we saw it used a lot during the drought, but I think we're really seeing increased interest in it right now in Nebraska just because of the shortage of pasture and the value pasture. And also, if you look at us as a state, we're heavy on crop residue. I mean, we have a lot of corn stalks, and so there's an opportunity for us to dry lot cows in the summer, use crop residue in the fall and winter, and really have that be a very competitive system option with a traditional going to grass type scenario.
You mentioned some of the management issues to look at, but for days when it's a little bit warmer out there, for cows that aren't used to being on dirt, what are the things that producers need to be aware of?
Yeah, so obviously we got to be thinking about heat stress as a possible issue, and so thinking about especially the calves first. They're going to be the most vulnerable, so adequate water supply, some shade for those, and then for the cows we might want to think about a shade type scenario for them as well. Could have a place where maybe we're looking at some watering to cool the pens. So being aware of that. That's not as much of an issue with a cow-calf pair as it is to fat cattle, just because they're not carrying the condition, but it's still something we need to be aware of and look to mitigate.
Fly control an issue?
Fly control, I think we just want to keep those pens clean, be aware of the issues that are involved with that. We can use a fogger or an insecticide to be applied if needed, but that's really a case-by-case scenario.
On the Market Journal website, we'll link to more resources from UNL about dry lotting cows. The Maine Nebraska farmer says Kelly and Cindy Bruntz of Bloomfield have come a long way from where they were on their farm 20 years ago. Back then, they were milking Jersey cows with Kelly's brother Kirk and father Bob. This month's magazine says the Bruntz dairy had one of the top producing Jersey herds in the state, but 20 years later, the former dairy producers are now purebred beef producers raising Red Angus breeding stock. You can read more about the operation and the importance it places on using grass in the Maine Nebraska Farmer. Common waterhemp is one of 6 weeds to have developed resistance to glyphosate in Nebraska. University of Nebraska-Lincoln researchers first announced they had confirmed its resistance in April 2013 after testing in 6 counties in the eastern third of Nebraska. Earlier this week, we talked with Nebraska Extension weed management specialist Amit Jhala to learn more about why common water hemp has become such a problem weed in this state.
Because of two reasons. Number one, several populations of common water hemp have evolved resistant to glyphosate as well as ALS group of herbicides, and these two are very commonly used herbicides in corn and soybean. So now, because common water hemp populations are resistant to both of group of these herbicides, they are no longer very effective to control common water hemp. And the second reason why common water hemp is a problem weed in Nebraska is because of continuous emergence pattern of common water hemp. In Nebraska condition, common water hemp can emerge throughout the growing season, like starting from the middle of May until the end of August. So that makes it very difficult to control because they can easily escape some herbicide applications.
Resistant water hemp is a problem across how much? How big of an area in Nebraska?
A recent survey conducted by Stratus in cooperation with Bayer Crop Science, and they interviewed several growers and crop consultants across Nebraska, and they recently reported that about 2.2 million acres are infested with glyphosate-resistant common water hemp in Nebraska, which is a significant number, and we need to consider this weed very seriously.
What are the options then for herbicide control?
Best option for management of resistant common water hemp is to start with a strong pre-emergence herbicide that should have multiple herbicide mode of action, and recently in corn and soybean there are several new pre-mixtures have been registered that can effectively control common water hemp. So use of pre-emergence herbicides with multiple modes of action is the foundation for early season management of common water hemp in corn and soybean both, particularly in soybean because our post-emergence herbicide options are extremely limited. So use and start with pre-emergence herbicide is a very important key, and then later on if some late emerging common water hemp are emerging, then growers can consider applying post-emergence herbicides, and they can also include a residual herbicide in tank mixture with post-emergence product, so that can provide foliar as well as residual activity for rest of the growing season.
What are the new technologies coming to market?
There are some new technologies are coming to the market. For example, you may have heard about Roundup Ready to Extend soybean as well as Enlist corn and soybean that may commercialize in near future. So that will provide additional herbicide option like dicamba based herbicides as well as 2,4-D choline based herbicides for control of glyphosate resistant broadleaf weed species. But again, we should not rely only on those herbicide programs, because otherwise we may end up with having common water hemp populations that will be resistant to multiple herbicides, and we will lose some of our herbicide options. So there is no any silver bullet right now.
Where can people go for more information?
We have recently updated all the information about new herbicides and how much control they can provide for water hemp and several other weed species in our 2016 Guide for Weed Disease and Insect Management, and it's available online on marketjournal.unl.edu. So this will provide very useful information.
Now with this week's weather outlook, here's Nebraska Extension Associate State Climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. Of course, during this last week, the major news was the precipitation that once again invaded the Central Plains and led to some significant planting delay issues. We basically had to wait for most of the week of warm, dry weather for us to be able to get enough drying for farmers to get out into the fields and start getting some of the late planting taken care of. Unfortunately, we have yet another system that's poised to move out into the central United States and is going to lead to some more significant delays. The big question is, as we see this system pass to the east of us, will we continue to see systems moving in a northwest flow through our region that would lead to further delays, or will we see a period where there will be ample enough drying that we can get producers out in the field and get caught up on some of the field work? So let's take a look at the upper miles and see what we have in store. Here is our upper air low that is expected to move its way into the Central Plains. Once again, slow but sure, it'll grind its way eastward. So we should start to see precipitation breaking out across the western one half of the state during the day, with the best odds across the Panhandle, and further as you move further east, less odds that we will see precipitation at least today. But as we go through the overnight hours, we'll start to see some of that moisture spreading eastward, and as we go into tomorrow, what we are going to notice is that upper air low starts to get organized and start to pull up some good Gulf moisture at the surface, and that should generate some thunderstorm activity starting in central Nebraska and then pushing eastward into eastern Nebraska during the overnight hours, and then that will continue on through Monday as the core of this upper air low sits over eastern Nebraska. Right now, quantitative precipitation forecast for this storm system is putting anywhere from 1 to upwards of 3 inches of rainfall over a broad section of eastern Nebraska. We could see some isolated totals depending on how much thunderstorm activity goes, and they could be greater than 3 inches, but for the most part it looks like a widespread coverage area. We're going to need a few days of drying, and here's the major concern. As this system passes up into the Great Lakes and weakens, we have another system that's going to try to drop toward the southeast, so we may get a temporary halt in the precipitation as we get into late Tuesday and into the first half of Wednesday before this system starts to make its way into our region. So here we are on Wednesday. We start to see it moving into the northern plains, pushing that frontal boundary through, so we'll see precipitation breaking out at least in the western half of the state, and some of that will pass through eastern Nebraska during the overnight hours. And as we get into Thursday, now we've got this northwest flow aloft, so any energy pivoting around this upper or low may give us daily chances of shower activity, particularly over eastern Nebraska, where we will be in the deeper moisture fetch. In western Nebraska, we should start to see some drying conditions. And as we get into Friday, here we have that northwest flow, so it looks like we may have a respite for a day or two as this trough starts to push to the east, but behind it is yet another system that's expected to move in around the 15th of the month, and depending on models, will move anywhere from the 15th to the 17th into the Central Plains. And once again, the models are projecting a very significant precipitation outbreak. So as we look at the 8 to 14 day forecast from next Thursday to the following Tuesday, we see with the resulting precipitation, we'll see below normal temperatures, and in terms of total precipitation, a broad area of above normal moisture across the entire Corn Belt.
Thanks, Sal. Today's interviews can be found individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, farm incomes, dry lining cows, and common water hemp control. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Jeff Peterson will analyze the USDA's May crop report, and Dennis Conley will give an overview of the world crude oil market. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.